Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, we could see an extension of the cheer that we saw on Dalal Street yesterday. Today also the global cues are quite positive and the GIFT Nifty also is pointing out to a gap up start for our own markets. If you look at the pre-open rates, strong pre-open rates coming in. Sensex up about 300 points. Nifty is also up about 100 points in the pre-open markets. But like I mentioned, global cues, those are strong. US markets are on a strong foot. We have the US Federal Reserve meeting which is kicking off today. Tomorrow the meeting is going to conclude. Asia Pacific markets are also doing well. Japanese markets are up ahead of the Bank of Japan's interest rate meeting. Expectations are largely that the Bank of Japan will hold rates steady this meeting, but we'll get to know the outcome tomorrow itself. Like I mentioned, that this meeting also aligns with the US Federal Reserve meeting, which will conclude tomorrow, and the rates are expected to remain unchanged again. So yes, a good sentiment to start the trade with. We will take some stocks in focus. For instance, your Bajaj Finserv is likely to see some reaction on the insurance stake buyout news, while we can see some reaction on Swiggy too after it announced a quick commerce expansion news. We'll be taking more stocks too. So don't forget to drop in your queries on our live feed and we'll take them up shortly. We have our guests waiting and they will be joining us shortly too. But before we move things further, let's quickly take a look at the top headlines this hour. Dow closes more than 300 points higher while the S&P 500 posted back-to-back gains. The two-day FOMC meeting also begins today. Stocks in the Asia Pacific also trade higher, tracking Wall Street. The GIFT Nifty is indicating a positive start for our own markets. Crude prices have risen slightly after Chinese economic data buoyed higher hopes for demand. Gold prices have also topped $3,000 as Fed meeting begins and safe haven buying emerges amid tariff uncertainty. And some big news in the insurance space. Alliance is set to exit Bajaj Insurance joint venture after 24 years. Bajaj Finserv and promoter entities will acquire Alliance's 26% stake in Bajaj Alliance Life and Bajaj Alliance General Insurance for 24,000 crore rupees. The move will take Bajaj Group's ownership in both these entities to about 100%. So like I was talking about, yesterday we did see both the headline indices start the week on a very positive note. However, the Nifty still remains within the 22,300 to 22,600 band for the sixth consecutive session. Yesterday we saw that the Nifty has ended above that 22,500 mark. It surged over 100 points and some of the top sectoral indices which contributed to the performance included the likes of Nifty Pharma and financial services. On the other hand, if we see broader indices also edged higher, nearly 0.5% gain, but mid caps definitely outperformed the markets. So yes, quite a good sentiment that prevailed yesterday, and we are hoping that this session could continue and extension of a recovery could take place in today's market too. But let's take some of the cues, what is setting the tone of the trade today. Well, we have the Nifty put call ratio which has risen up to about 1.05 levels from 1.02 levels. So it looks like the bullish sentiment is expected to remain intact. The second is your F&O ban list, the stocks which continue to retain in the F&O ban, that is including your likes of BSE, IndusInd Bank, Hindustan Copper, Manappuram Finance and SAIL. The next is your fund flows data. Well, FIIs, they continue to be net sellers. They have sold about 4,400 crore rupees in the cash markets. On the other hand, if you look at the DIIs, once again, they have lent the helping hand and of course, they have bought stocks worth about 6,000 crore rupees in the cash markets. Now, as I was talking about the pre-open rates, well, Sensex is still above that 400 points and Nifty is up about 150 points. But without further delay, let's quickly get on board with our technical expert of the show. Joining me is Hemen Kapadia of DRChoksey Finserv. Hemen, good morning. Let me start. Everyone has been waiting for this selling to bottom out, and now that Nifty has been oscillating between 22,400 to 500, do you believe the worst of the panic sell-off is over?
Very good morning to you, Lovisha. Thank you for having me on the show. It was a pleasure. Yes, I think whatever positive that we are seeing currently are restricted on the daily chart, Lovisha. The weekly chart will obviously take some more time to consolidate, recover, because it's been 4,400 points of almost 4,400 points of a decline, Lovisha. So yes, things are beginning to look better. Market bulwarks like Reliance, they've seemed to have bottomed out after 9 months of a decline. So yes, things are beginning to look up, and yes, assuming we build on today's opening momentum, Lovisha, that means we'll be posting a higher top, higher bottom on the daily chart. The VIX is sanguine below 13.5. So yes, I think I'd completely go with what you're saying. Everything seems to suggest that a turnaround is around the corner, or actually we might have already turned around. Uh, and yes, that would also mean, yeah, we have bottomed out, at least from a shorter term point of view. The percolation of the positives of the weekly could take maybe a week more.
Okay. A turnaround is possible then. Good news for the markets then, Hemen. Hemen, what about the Bank Nifty index? Because that has gained for the third straight day, and of course, it's contributing to the overall recovery as well. But would you say that the Bank Nifty is also poised for a bigger set of gains from here on?
I think so. 47,844 is a level which we have tested 1, 2, 3, 4, 5, 6 times over the last 4 to 5 weeks. And okay, we have breached it and closed below it just once, and we've had an immediate bounce back. Today is a bullish gap up, which is a good sign for the market. Normally, the indexes don't sustain gaps, bullish or bearish, for a very long period of time. These are 10 times, 8 times, they don't. But yes, bullish gap up is a good sign. And yes, I think the Bank Nifty 47,844 is sacrosanct now. Should not break, doesn't look like breaking. We are opening the cash spot Bank Nifty is around 48,800. 49,057 is my resistance level. I think above that, things should start looking to get better. But yes, I think once again, I can stick my neck out and say the short term bottom has already probably been for Lovisha.
Okay, short-term bottom has been done then. Hey, if you look at the defensive SPAC, Pharma is still outperforming, and yesterday it was one of the top sectoral performer too. But if you look at the IT and the FMCG pack, that continues to remain bogged down. Do you believe that the Pharma index remains insulated from all the tariff noise that we have been hearing about? And what is your perspective on how to approach the defenses on and whole?
Uh, I'll start with IT, which is the easier one that I look at it, Lovisha. Things are not looking very pretty. We've had a 4.5 year move and a humongous move. I mean, if the index moves from 11,000 to 46,000, and the whole market bottomed out on what, 23rd March 2020, that was a COVID panic bottom. So from there, the NSE IT index has moved from 11 to 46,000. It's entered a correction of a greater degree. So extreme near term, yes, oversold. If the market bounces back, which looks like, I think IT will also bounce back, no doubt. But I believe it has entered a correction of a greater degree. It has made a significant peak and a new high in the next few months, or maybe even for the rest of the calendar year, seems like a tall order. That doesn't look like happening. On the other hand, if you look at pharma, I think one needs to be selective. Something like a DV and Dr. Reddy looks different. Why I mean different? I mean they look more positive than negative. While Sun Pharma seems to be looking heavy at higher levels. So it's a mixed bag. And if you look at FMCG, deeply oversold, a recovery is underway. So the defensives still remain a bit defensive, but it's not that they're not going to bounce back.
Okay, all right. But let's also talk about metal space, Hemen, because that has been quite resilient past 1 month. Do you have any favorable picks that is coming out now that China has also announced some measures to revamp its consumption?
In fact, metals was the first sector which showed relative strength. 6 week sideways movement, then a breakout, and the oscillators on the weekly charts have turned positive. So, frankly speaking, it was the first of the block, so to say. And yes, it still continues to look good. Hindalco and Tata Steel remain favorites, but thing is, they have moved a bit. So, I would maybe try to uh, play a stock which would do something of a catch up. I think Hindustan Copper and SAIL can be looked at because they haven't done as well as Hindalco and Tata Steel. But I think looking at the technical situation, oversold, positive divergence, rounding bottom, turnaround happening. So I think that's where we can focus on.
Okay, Hindustan Copper and Steel that you have pointed out. But the first trades coming on your screen, well, we have opened once again in the positive territory, more than 0.5% gain coming in from the Nifty 50, 22,650 mark. That's where we have opened at it right now. So yes, we have crossed and sailed past the 22,500 level zone, and we have 22,600 at this point of time. Sensex is also doing well. Sensex up about 450 points, more than 0.5% gain coming in for Sensex 2. So yes, plenty of positives coming in for the markets. If you look at the broader end of the markets, mid caps and small caps, both of them doing well. Small caps today, small caps are outperforming at this point of time. More than 0.5% gain coming in for small caps. Mid caps, on the other hand, 0.4% gain. If you look at some of the sectoral indices, Nifty IT continues to remain bogged down, flat in the red at this point of time. However, if we look at Nifty Metal Index, like we were talking about, it has been quite resilient past 1 month too. Once again, one of the top performers at this point of time. 1% gain coming in for the Nifty Metal Index. PSU banks, Nifty PSU Bank, more than 0.5% gain coming in there too. Auto index doing well. Yesterday also auto index did quite well. Today also we can see the extension of that recovery, more than 0.5% gain coming in for the Nifty auto index. Let's take a look at some of the top gainers on the Nifty. Well, we can see some of the private lenders taking an upper hand. ICICI Bank 1.5% gain, Axis Bank 1% gain coming in. So yes, ICICI Bank, Axis Bank doing well. Bajaj Finserv, definitely on the news of the insurance stake buyout, it's doing well, and more than 0.5% gain coming in for Bajaj Finserv too. Hindalco, Larsen and Toubro L&T is also doing well. Tata Motors, after yesterday's HSBC buy upgrade call, is doing well. 0.5% gain coming in for Tata Motors too. On the other hand, if we look at on the losers end, like we were talking about Nifty IT index, it remains bogged down. And yesterday we saw it was, the entire day it was completely in the red, but at the end it did settle flat in the green. But today again, once again, it has opened flat in the red. So yes, we can see some of the top losers on the Nifty 50 dominating the charts. You have your TCS and Tech Mahindra with about 0.3% cut at this point of time. But Hemen, broader markets, they were in bear territory. Today also we can see some performance coming in from the small caps, 0.5% gain coming in there. So, but any selective pockets that you're finding valuable there, now that we are seeing a little bit of a recovery there too?
I think some of the PSU companies, Lovisha, are showing some technical green shoots. An NTPC. NTPC is one stock which seems to have bottomed out. You have SJV and looking promising. So has PFC. So some of these companies are beginning to show some sparks of life. Yesterday we saw volume happening in an Hudco. So I guess some of these companies technically are looking good. Many of them are deeply oversold. They've come off for 6 to 8 months. And yes, so I would, if you were to give me a pecking order, I say NTPC looks good if one were to look for a trade for the next 3-4 weeks. And even a PFC isn't a bad idea, and even a Hudco for that matter.
Okay, all right. But let's look at one of stock in focus, that is your Bajaj Finserv. Well, it did open in the green, but right now 0.5% cut coming in. Well, this comes after Bajaj Group is expected to buy out Alliance SE's stake in their two insurance joint ventures for a total of about 24,000 crore. It marks the end of its 24-year partnership with the world's largest insurer too. Bajaj twins, both of them, today however it's a little bogged down, but however both of these counters have shown strong performance from December onwards, and plenty of brokerages have also turned quite bullish too on the counter. What is your take for both of them?
I think relative strength coming in, Lovisha. I'll start with Bajaj Finance, which is a easier one. Okay, Bajaj Finance, Bajaj Finserv, maybe I'm digressing a bit, Kotak Bank, HDFC Bank, US blue chip companies, they haven't performed over the last 4 years and the market has 4.5 years. So now it's time for them to play catch up. Starting with Bajaj Finance, we are proximity of its all-time high. Technically speaking, very few stocks are currently in a situation where the stock has given a long-term breakout and is very close to its all-time high. The indicators are supporting. Frankly speaking, if I were to take a 2-year view, Bajaj Finance, which is currently at 8,500 Lovisha, I can safely tell you we should be at 11,000 or more. So in a wobbly market, which is giving a recovery, I repeat, not a rally, Bajaj Finance is in a bull market. Bajaj Finserv, slightly similar. hasn't yet broken out. So Bajaj Finance is looking good, but Bajaj Finserv is also going to play catch up. So I would be positive on both of them. But a market like this, I would be tad wary about trading. I would look at it more from a slightly investment point of view, Lovisha.
Okay, all right. Strong views coming in for both of these counters. 11,000 target that we can eye out for Bajaj Finance. But the next stock in focus, that is your NBCC India. The stock is reacting well after the company did get awarded 44 crore contract for project management consultancy services from Mahatma Gandhi Institute for Rural Industrialization in Wardha. Hemen, if you look at NBCC India stock, that has fairly been range bound past 6 months. But what do you expect in the near term? What can expect on the stock for NBCC India?
I have a preference for some of these PSU stocks, Lovisha. NBC, not any different. 7 months of a decline. Stock from 140 goes to 70. Okay, we're currently at around 78. Stock become half, deeply oversold, downside limited, consolidation phase at play. Above 82, it'll do a high top, high bottom. Things should start looking up. So frankly speaking, I would say if you have a 2 month view, NBCC quantifies as a buy with a stop loss of around 71, which was the recent swing low. So it's on the angle of a turnaround, and I believe it should probably get a technical confirmation at the end of the week when the weekly charts form, Lovisha.
Okay, all right. 75 is the support level that we can eye out for NBCC India. But let's move on to another stock in focus, that is Star Cement, because the stock has been reacting well. The company's arm, Star Cement Meghalaya, has been declared as a preferred bidder for composite license of Boro Hudong limestone block by the Assam government. If we look at Star Cement, I mean, the stock has picked up quite well after December, definitely on the Ultrastech acquisition news too. And it has been trading in a range, however. Any target levels that you want to outline for Star Cement?
We've been relatively range bound despite the near-term positives, Lovisha. So in terms of levels, I'd say support comes in at around 200 and 196. That's a small range. Resistance would come in at around 218 and 234. It's not done much over the last 12 to 14 months and is probably taking a breather of sorts after a move from 80 to 250. So if I take a longer term picture, I think things are looking positive. But after this move, I think it might take some more time to consolidate, Lovisha.
Okay, some more time to consolidate for Star Cements. Let's move on to another stock, that is your IREDA. The stock is eking out gains of about 3.5%. Well, the board has approved the enhancement of its borrowing program for FY25 by about 5,000 crore rupees. Now, with this, the company's borrowing limit also for FY25 has been increased to 29,200 crore rupees from 24,200 crore rupees. Hemen, the stock has been trading near to its lowest point. However, today it's been doing well. Do you believe that we can see a further, good move coming in, or do you expect a further underperformance for the stock?
I believe it is. I believe Lovisha it is trying to turn around. Once again, it's 8 months of a decline. It's in a downtrend on all time frames. But yes, getting oversold and rather oversold. So I would say that a close above 154, we currently 142. That's what, almost 8% away from your Lovisha. But it needs to happen. This is a swing high. So if we take that out, that will be the first indication of a technical turnaround, at least from a shorter term point of view. So deeply oversold. So I would say downside does appear limited. But
Okay.
we could take some more time for these anticipated technical positives to fructify, but I'd say not much to lose from this point of view.
Okay, all right. Let's take some viewer queries, because they've been waiting and lining up with a lot of queries right now. Well, the first query coming in from Naveen Hemen, he's asking the view on Varun Beverages. Varun Beverages, if you look at past 1 month, it has exhibited quite a strong performance, and plenty of brokerages have also turned quite bullish on the counter. Even today, we had a brokerage counter which said DAM Capital maintained a buy rating on the counter and gave out a target price of about 670 rupees. But there have been certain brokerage reports that have even pegged about a higher counter, which is your 800 rupees for Varun Beverages. What do you expect? What is your target?
The way I see it, it's a recovery, not a rally, Lovisha. We've had a scintillating up more. I mean, if you look at the price levels of our own beverages from a low of some, okay, these are adjusted for bonuses and whatever. So from a low of something around 22 in Feb 17, Lovisha, we went to a high of what, almost 650. I believe we've had a phenomenal 7 years or more. Currently, we are in the midst, in the throes of a strong recovery, which I believe should continue. If things were to change radically from a longer term point of view, it's very far away. Monthly closing about 660. I know it's very far away, but that would make sense. Otherwise, we've seen a fall from 680 to 420. It's a recovery, not a rally as yet.
Okay, all right. Let's move on to another viewer query. That is your Mukund Yadav is asking the views on NCC India. NCC, how does the stock look like, Hemen? Because past 6 months it has been lagging 40% downtick, and Q3 performance was also not quite impressive. What is your take on the counter?
I think it's not fair to compare, but something like the NBCC we saw 8 months of decline, deeply oversold, downside appears limited. A close up of 195 would do two things. High top, high bottom indicators would turn positive and things should start looking up. So, firstly, I wouldn't be bearish on the stock. Only if it closes below 170 is there a cause for concern. Doesn't look like a slow grinding recovery should unfold. Currently, it's flat, but I believe a bounce is around the corner, and many of the PSU stocks are very similarly poised from a technical point of view.
Okay, all right. Let's move on to another stock in focus. That is your Swaraj is asking the view on HUL. HUL, I mean, quite range-bound moves. It's trying to play a catch-up, but still, most of the gains gets fizzled out. What is your take on HUL? Can we expect any turnaround coming ahead?
Frankly speaking, I wouldn't say perplexing, but a bit surprising, Lovisha. When the market tanks, I mean, it has been since it peaked on 27 September 2024, you would expect the defensives to do the defending, honestly. So IT and FMCG haven't done that. In fact, Hindustan Unilever and Lever have been down to 7 months from a high of 3,000 plus to sub 2150. So, I mean, that's a bit flummoxing. But having said that, deeply oversold. I don't expect it to outperform, but this downward erosion that you're talking about is slowly coming to an end. 2150 is gaining some importance in terms of importance of the support level. If 2150 holds, which it looks like, close about 2200 would be a small positive. I believe a recovery is around the corner. Not very exciting, but I don't think we are going to see too much of price erosion for a year, at least in the near to medium term.
Okay, not much price erosion expected for HULs. Okay, let's move on to another viewer query. That is your Shweta Naidu is asking the views on Jupiter Wagons. She's seeing a 57% loss, and at what level should she exit and reduce her losses? She's asking the view on Jupiter Wagons. It's from the 6 months perspective, Hemen, the stock has been down about 44%. What do you expect?
Okay, firstly, as of now, hold. Keep a stop loss of 275. Uh, the investor can keep an eye on these levels. Firstly, the first headache comes in at 324, and the next headache, I mean, in terms of resistance, the next resistance level comes in at 331. So I am assuming that it will make a sincere attempt at overcoming these two levels in the current month itself. That happens, we should be seeing a recovery possibly to 380 and maybe 420. So hold as of now. Keep a strict stop loss at a level I mentioned. As of now, the worst is almost over, but this is a slightly short to medium term point of view, and a recovery is around the corner. So fingers crossed, things are beginning to look just a shade better.
Okay, 324, that is the first resistance that we can eye out for Jupiter Wagons. Hope you got your query answered, Shweta. Let's move on to another viewer query. Well, Satya is asking the views on the medium-term outlook on Angel One. Angel One, what is your outlook, Hemen? Because if you look at the stock today, the stock has been doing quite well, but what is your outlook? Today, it's about 2% gains, but if you look at from a 1 month perspective, 8.5% downtick.
Seems slightly repetitive, Lovisha, but deeply oversold. A recovery is underway. If I take a slightly bigger time frame, it's done nothing for the last 1.5 years or so. I know. Volatile stock, it has moved in a big range, 3800 plus on the on the upside, 2000 on the downside. We are at strong support levels. Sub 2000, there's a very strong congestion area, which would limit the fall currently. I think it is doing that. So a bounce is around the corner. One can play it, uh, but we get the first indication of a confirmation of this view when it crosses and closes above 2159. So, same story, not much to lose. A recovery is coming.
All right. Let's move on to another viewer query. That is your Kishore is asking the views on overall OMC stocks. OMC stocks, what is your view, Hemen? Because the crude price is still above that $70. We did see a dip below $70, but it is back above $70 per barrel at this point of time. But overall, what is the views on your HPCL, BPCL, and all of those counters?
I like IOC, PPCL, uh, HPCL in that order. Uh, all of them are looking set for a bounce back after prolonged decline, and it's not just been a decline. They've taken supports at longer term levels, which indicate that these levels are working. Uh, the short term picture has turned positive. The oscillators have given a crossover buy. A weekly turnaround is also underway. So I would be positive on IOC, BPCL, HPCL in that pecking order, Lovisha.
Okay, all right. A weekly turnaround is possible for these counters. Let's move on to another viewer query. That is your Satya is asking the views on Novama Wealth. Novama Wealth, how does it look like on the counter? Because so far this year the stock is already down about 21%. Hemen, do you expect further underperformance?
Underperformance, yes, but downside, no. Three
Okay.
rounds of positive divergences on the shorter term charts, Lovisha.
Hmm.
5700 is strong resistance, which I believe we'd make a sincere attempt at overcoming this level this week itself. Close above that level 50 5700. That could happen maybe not this week, next week. I think we'd see a further upside. So once again, 6000 coming, maybe this month or the next.
All right. Okay. Let's move on to another viewer query. That is your Geetu is asking the views on Paris Defense. How does the stock look like on the counter, Hemen? Because it was trading above that 1000 levels, but right now it is at 893. Do you expect it to reclaim those levels soon?
800 doesn't look like breaking. In fact, 880 doesn't look like breaking. 940, 980 above it, things should start looking good. So, but the positivity in the stock, I need to say the longer term charts seem to suggest that we are going to take time to recover from this fall. But yeah, short to medium term thing should start looking up. They probably have.
Okay, short term, medium term, it's going to look very positive. But let's move on to another one stock in focus, that is your Aditya Birla Real Estate. Well, the company did announce its entry into the Pune's residential market with Birla Punya, which is a luxury housing project in Sangamwadi, which is the heart of Pune. Hemen, how does the stock look like on the charts? Because today also the stock is reacting quite well, 4% uptick.
I would like the stock low vision because uh, oversold. 1600 is rock solid support. That doesn't look like breaking. I know 1600 is probably 250 points away. That is far enough. But a turnaround is around the corner. 3100 to 1600, we've seen a 5 6 month decline. Worst is almost over. I would say that one can take a calculated risk, keep a stop loss of 1600. I believe the recovery should take it to 2000 and 2200 over the next few months.
All right, recovery should take place in the next few months. But just one last question before we let you go, Hemen. What are your top picks at this hour? Because we have discussed a range of stocks, but what are your top buys?
Okay, I I like a couple of stocks. I mean, the first one is Aarti Industries. I'm playing it safe because it's deeply oversold, not much to lose. So a buy on Aarti Industries at around 380, 384, maybe slightly lower level because markets have opened gap up. Stop loss 370, target of 412. A weekly turnaround is at play. And secondly, the other stock which looks quite interesting is ABB. It's formed a rounding bottom on the daily chart. Uh, Looks quite attractive actually. Positive divergences, rounding bottom, turnaround, oscillators buy. So a buy on ABB at 5185. Stop loss of 5135, target of 5285. I mean, the target has already been reached. So I would need to tweak the figures a bit. This was pre-market. So one can buy it around 50 to 50 Lovisha. Keep a 100 rupee stop loss and 200 rupee target. I believe we are heading towards 5800.
Okay, all right. Aarti Industries in ABB India. But thank you so much, Hemen. With that, we have to let you go. But thank you so much for your time and answering our viewers' queries so patiently. We hope that we connect with you soon.
Thank you for having me.
All right, let's take a quick check of the markets right now. Well, both of the counters are holding up well in the green. Sensex is up about 550 points and Nifty is also above that 22,650 mark. So yes, we are doing well because all the sectoral indices are participating in the recovery process too. Nifty Auto Index with about a percent gain. Nifty IT Index, which was bogged down in the trade in the initial part, has once again staged a comeback and it is eking about 0.5% gains at this point of time. Nifty Pharma Index doing well, 0.4% gain. Nifty Metal Index nearly 2% gains coming in for the Nifty Metal Index too. If you look at the broader end of the markets, good participation coming in. Both the mid cap and small cap indices have given strong gains of about a percent and they are outperforming the headline indices. But with that, let's quickly get on board with a fundamental guest for the show. We have Kranthi Bathini, equity strategist at WealthMills Securities. Kranthi, good morning. Let me start that, we are finally seeing a comeback. Now that the Nifty's valuation is below the 5-year average, but what do you make sense of the markets going ahead? Because we have the reciprocal tariffs which can play a hindrance for a meaningful recovery.
Lovisha, good morning to you. Yeah, Indian market seems to be, we are trying to climb the wall of worries again. 22,500 Nifty as we come out of that range, and right now we are slowly marching ahead of all the resistance levels in technical terms that can create some kind of momentum thanks to the domestic macros, the improvement in terms of the tax revenues and cooling of the inflation. These are giving some kind of booster and positive sentiment for Indian markets in the medium to short term. But still, the global cues and the global worries, the Trump trade worries have been weighing on Indian markets. In the Asian market segments are concerned, Asian markets are positive when compared to all the global cues. But in the Asian market cues, we can see complete outperformance of China, and also the Indian markets are right now following the suit. So we can see some kind of positivity is coming back in terms of the Indian markets are concerned. When we interact with the global investors across the globe, even though some medium to short term there is a kind of a some kind of inconvenience for them for in terms of the valuations or vis-a-vis when they compare with the valuations of China is concerned. Medium to short term, the recent changes that made by the Chinese administration in terms of the boosting the consumer sentiment, encouraging the tech, the DeepSeek, given the complete tech rally in China, and also the recent measures taken by the Chinese government in terms of the consumer sentiment and investor sentiment, and also the industrial entrepreneurial sentiment are concerned. The measures what they taken have really giving some kind of a emphasis towards the Chinese market for the foreign portfolio investors are concerned. But still, the long-term worries are still there for India in terms of their long-term growth, and also the policy obscurity is concerned. Whereas India have the edge on these points in terms of the policy continuity, long-term growth story, and also the policy transparency and continuity is concerned. So in terms of the long-term is concerned, definitely India have the edge on China. That's where we can see some kind of a heightened activity in the coming days once we resume the strong growth. Right now, investors have been waiting for the strong growth indicators. That's where missing because of the recent softening of these strong growth indicators have creating some kind of skittishness in terms of the of the investments are concerned. But the recent correction, given some kind of softening of the valuations also, what we witnessed is some kind of a froth has been that has flushed out of the system right now. Uh, and right now, from here onwards, if we can, market could able to withstand the level of 22,750 on Nifty, we can see some kind of 23,000 level. 23,000 level is a crucial inflection point in terms of the sentiment of the market is concerned. If we could able to sustain 23,000 levels, we can see some kind of a heightened activity back in Indian markets are concerned in the medium to short term.
Okay, all right. Kranthi, like you were talking about the Chinese stimulus measures, I want to understand from the FI's perspective, because on one hand we have the US markets which has turned very expensive, but now that we have seen that the dollar is cooling off and it has reached above that 103 levels for US dollar index. So what does it mean for FIs? Because on one hand we have the tariff uncertainty which is playing out between US and China. On the other hand, we have China announcing the stimulus measures, and on the other hand we have India with about 15% correction from the highs. So where do FIs actually stand at this juncture, and what does it mean?
Lovisha, in the medium to short term, the foreign portfolio investors who are in tactical and also looking for the medium term investment strategy or the trading strategy is concerned, without any hesitation, they are looking for investing in China in a medium to short term because of the relative valuations are concerned. But in terms of the long only funds are concerned, they are quite bullish with respect to Indian markets. As I mentioned to you, the points in terms of the policy transparency, in terms of the policy continuity, and long-term growth prospects. These are the key points where India have an edge when compared to the Chinese markets are concerned. In terms of the long-term prospects are waived with the Chinese markets are concerned. So for Indian markets are concerned, foreign portfolio investors, they're quite bullish with respect to the long-term prospects. But what they're trying to do in a medium to short term is they're going to be on a wait and watch mode at this point of time. But given the kind of the macro improvement of Indian markets, the tax revenues, and also the RBI's prompt action, also giving some kind of comfort in the medium to short term for the foreign portfolio investors. They are in a wait and watch mode in terms of moving their coins at this point of time towards the Indian market. But my sense is definitely on a longer term basis, there would be a complete reversal of what we witnessed, the exodus of funds from Indian markets in the last few months and last few days. We can see some kind of reversal at some point of time going ahead.
Okay, all right. Kranthi, they have been also bogged down because India's earnings season has been quite subdued. So from Q4 is going to start soon from April onwards. What do you expect? Can we expect at least a sign of certain recovery from India from Q4? And what is the overall FY26, peg out to be? But let's start with Q4 at least.
Yeah, Lovisha, Q3 was concerned, it's a little bit subdued. We can't see any kind of earning surprises. At the same point of time, we have not witnessed any kind of negative surprises. At the same point of time, when we interact with the managements in India, they're quite positive and sanguine about the coming quarters and coming prospects of the in terms of their expansions, in terms of their revenues and margins improvement in the coming quarters. So that's where India is gaining the edge. Okay, we have witnessed some kind of softening of the earnings in the medium to short term, but Q3 sense of some kind of recovery we can expect, but still we crossed our fingers to observe because the recovery everybody anticipated in the Q3, but Q4 right now we are watching, but definitely there can be improvement despite of the global headwinds in the medium to short term. But definitely Q4 can be a better quarter when compared to the Q3 is concerned.
Okay, all right. Okay, Kranthi, right now the consensus in the market remains to buy banks at this time. But what is your take? Because we have NIMS which is under pressure and even the credit growth is quite lagging. So do you still believe that the sector has got what it takes to lead the overall market recovery too?
Lovisha, one thing is in terms of the India's long-term theme is concerned. So banking and financial services sector for India is one of the key sector for in terms of the long-term investing is concerned. When we resume the strength in terms of the growth, what we are weighing and also the doubling of GDP, that's what the template the government is carrying. If that theme has to be there, banking and financial services are going to take a big advantage of this theme. And banking and financial services are pursued as a center of epicenter of the growth. So if the investor is a long-term investor, definitely recent consolidation in these stocks can be a very good opportunity in terms of the large cap private sector or large cap public sector banks are concerned. One can invest. This is a purely a long-term perspective, but medium to short term, the mentioned points and parameters going to weigh in the medium to short term. But in terms of the long-term credit growth is concerned, definitely since the interest rates have inflation has been softening and interest rates have been in a we entered into the first rate cut, and also if the same rate cut cycle is going to continued in the coming monetary policies, definitely banking and financial services going to take the much benefit from this interest rate cuts cycle is concerned at this point of time.
Okay, okay. Just one last question before we let you go, Kranthi, because we have the Fed outcome which is coming in tomorrow, and the consensus still remains that they're expected to hold rates steady this time too. But on an average, what do you expect Fed to do this year? How many rate cuts are you expecting on an overall for at least 2025?
Loisha, it's a $1 million question at this point of time. All the analysts in US are trying to gauge these numbers. The mood of Fed action has been crucial for the global markets, but the recent consumer sentiment and also the indicative inflation rise with respect to the tariffs are concerned that has been weighing on US markets. See, the entire bargain of this tariff and negotiations are concerned, it's going to weigh on the consumer sentiment, and also US consumer is the ultimate beneficiary, or is the US consumer is the victim of this tariff war? That's the bigger question, because when this kind of tariff war goes on for weeks and months, there will be unintended consequences. One of the key unintended consequences, outcome of the key unintended consequences are, one thing is the price inflation. So the job inflation and price inflation can go up in US. That can hurt the interest rate cutting cycle of Federal Reserve. So I believe Jerome Powell will be maintaining the interest rates in a status quo. I get surprised if there is any surprising rate cut. But at this point of time, because there is a lot of sense of obscurity, and also the inflation worries are high at a larger extent, Federal Reserve going to take a stance of maintaining the interest rates, key interest rate parameters. They're going to maintain a status quo in the medium to short term. But I don't think so. They are in a hurry to jump and cut the interest rates in US is concerned. But in terms of India is concerned, I have a different opinion in terms of the interest rates reduction is concerned. RBI can go ahead of reduction of interest rates as inflation is entering into a comfortable level.
Okay, but Kranthi, just one thing that now that we have certain inflation fears in US too, given the trade war concerns are rising up, do you believe that there could be certain spillover to India as well?
Definitely, because it's a global rot that's getting created. So we can't hide from this tariff wars. Some kind of impact and some kind of sentimental impact and global cues impact would be there. But in terms of the earnings are concerned, It can be very much stock specific. It can be very much sector specific. But in terms of the global sentiment and global cues are concerned, definitely we have our pie of weightage on India in terms of their this tariff is concerned, the sentiment is concerned. But as far India is concerned, I don't think so. Trump administration is in a hurry to impose any kind of unwanted tariffs are concerned. End of the day, tariffs are beneficial for both the countries. It can be bilateral. It cannot be unilateral. At some point of time, they can sit on a table and negotiate for the mutual benefit of the both the countries. I don't think so. In a hurry, Trump administration is going to impose any kind of tariffs on India. The main impact, what we are witnessing, they started with China. They're right now a little bit softening on China, and they want to go on Mexico, Canada, and now on Europe. So the spillover effect is there right now, but I don't think so in a hurry, because the victim of this entire bargain in the medium to short time is U.S. consumer, which can reignite the inflation in U.S. So I don't think so. The statements have been quite strong, but the implementation can be in a phased manner and at a negotiated manner.
That's right. He's on a negotiation spree at this point of time, Kranthi. But with that, we have to let you go, Kranthi. But thank you so much for your time, and hope that we connect with you soon.
Thank you. Always my pleasure, Lovisha, to share my views with you.
Thank you. Thank you. All right, let's take a quick check of the markets at this point of time. Well, we are still in the green, definitely, and strong in the green, as I say. Sensex is up about 550 points. Nifty is above that 22,650 mark. We are slowly, treading towards 22,700. But let's hope whether or not, and we'll see whether or not we can cross that level too. But with that, we've come to an end of this edition of The Opening Bell. Don't forget to tune in at 3:30 for Closing Bell. We have another market guest where we can discuss about how the market is developed and what the stocks were in focus. Until then, signing off.